Welcome to Pyramid Securities. This is an investor education initiative. We are going to do a stock analysis of PAYTM. What happened? What is in store for PAYTM? It's going to be fundamental comes technical. What we are going to share is a very simple fundamental analysis, which will take only 5 minutes for you to do. Okay. Any stock you do this 5 minutes check. It's like a dips check. Like you taste something, no? When you before the food is final preparation made, you taste it, no? Whether there is enough salt or salt spice in this before you finish it. So this test will help you to identify the stock is a good stock or bad stock. Okay. Now let's look at the first thing you have to look at is face value. Face value is 1 rupee. Face value 1 rupee means like it's all juice is already been sucked out. Okay, face value 1 rupee is highly dangerous, and especially at 547 rupees, whatever it is. Number two, what irks me is like forget about ROE because they're not making losses. Zero promoter holding, zero promoter holding. Oh, you can ask me why not? Why it can't be zero promoter holding? L&T has got zero promoter holding. ITC has got zero promoter holding. They are professionally managed businesses. Okay, and I mean, the professionally managed business doesn't mean that this is not professionally managed. I really do not know how professionally they are managing it. So that's the question. Number two, they have a reserve of 13,172 crores. 13,000 crores reserve if the company has. See, generally your resource is out of only your savings. Okay, out of the profits, out of the profits after dividend, taxes, everything. No, it's got 13,000 crores reserves. What money is that, man? They have never made profits. This is all the money you paid as share premium. This is the premium you paid for the shares. This is all money belongs to you. You already paid. Whoever is invested in the PAYTM, the IPO, they were given this money. And what has happened is the venture capitalist and the promoters from this is what I that is what I can come to a conclusion. They have taken the money out. This money is lying inside. So this money will also vanish one day, and what they might try and do some buying out of some other company. They'll try and buy out some other company, which like they'll say some backward integration, blah blah blah. I don't understand. So for an online payment company, why do they need so much of I mean, in the sense like why did they raise so much of money? Okay, online means supposed to be cheap, correct? Physical means like expensive. Online must be cheap, correct? So okay, so this is one net profit is 2,686. Now let's look at every quarter, like from September onwards, 2020, they have never made money in any quarter, any made profits, any quarter. Now, if you look at on a yearly basis, see there the sales is for 400 rupees, expenses like 220 or 2,100 rupees. What it is like basically you earning 4 lakhs and spending 21 lakhs. It's almost three years, three times, almost four times, two times. What you see for generating this much of revenue, you're spending double the amount. That means something drastically wrong. I don't want to get into the details. It could be many things, so I don't want to be very negative about it. So this is what is this company is about. Then how did the company raise so much of money? Now, I mean, actually, I really can't understand why how a company with so much of losses can come to public raise money. I can understand you invested money. Let's go over the investors there. Let's look at the balance sheet. 46 crores, 46 crores, 60 crores, 65 crores. This reserves, I don't know if this is reserves like where this all come, I don't know. Borrowing still there, which 13,172 crore reserves. Why should you borrow 220 crores? What is this other liabilities? Like, all these questions, like, when you have 1 crore in your bank account, will you borrow 200 rupees? Or you borrow 20,000 rupees? So these are the things like which we need to ask. Okay, before buying any stock, see what I said so far is not all that different. Different to find out. It's a preliminary check. We'll try and do for other stocks more advanced check. Let's go to who are the investors. FII is like 5%. Now it's 77%. I really don't know what this figure is. So they're just, well, I mean, the number two DAS has got 1%, and the public has got, 21%. So this must be like 77% of the money of that 40. That is 77% of the capital. That is what is the capital? 77% is of this capital 64 crores is held by FII, which means see the FIIs would have been the venture capitalist. They were exited at a huge premium. and gone away. Like they will keeping something residue just to keep the company running. So this is technical. Okay, now let's look at see this is fundamental. Let's look at technical. So this is the daily chart. Daily chart. Now, very simple. See, I always talk about volume. See, there was a huge volume here. This is the volume spikes. There's a huge volume, sell off, sell off. Correct. See again here, huge volume, sell off. Now sell off with huge volume. Now this is like very dangerous. It can go anywhere. Like let's look at monthly chart. Like you'll be shocked. You look at monthly chart. Right from the day word go, they've been selling. They've been selling, heavy selling. Major selling around 521 rupees. Major selling. Now then dead cat bounce from 521 low to 845. This is called the trap. This is called the honey trap. Okay, we think like it's a good company, it'll start doing well, easy PAYTM everywhere. But they're not making money, man. So when it breaks this, God only save that can save. And other, I mean, they should start making money. Unless they start making profits, there's no point. At least they must cut off the loss. They should at least they should like let's say every quarter, like they should at least this expense should come down, like or this should stay put. This should double. So they must make at least some marginal profits. Even after say another thing is when there is no promoter holding, the biggest problem is maximum money will be swindled out. Swindled out in the sense under invoicing, over invoicing will be prevalent in companies where there are no management control. The owner and the owner lack of owners running the business. This is the biggest problem. So Paytm looks like. Very bad. I mean, it's in a very bad shape. The chart is in bad shape. The fundamental is in bad shape. So it is like dangerous. It's like a like. See, there is some tunnels. You can see some light at the end of the this tunnel is like I don't see you will see light for several months to come, I suppose. So don't go. Just stay away. There are 100 good companies better than this profit making companies. If you're a retail investor, don't touch any company which is not making profits. Don't touch. And if you go and look at the Zomato, you go and look at Zomato, the same thing is going to may happen to Zomato. Be careful. Exercise caution. This is an investor education in the channel initiative. Thank you. Have a nice day.